Hi guys, thanks for tuning in to another episode of Nuggets News. Today's video is going to be a walkthrough of how to trade some different volatility products because, as you know, price has been coiling up. These crypto markets tend to go in cycles and these narratives, and I just think that with volatility declining, we're very likely to see huge expansion in that volatility. And there's ways that we can trade that without necessarily having to know the direction, whether or not it's going to break up or down. So this is going to be more advanced, I guess, trading styles, but hopefully I'm going to explain it all really clearly. And even if you don't plan on executing these, I think it's a great learning experience and you might use them further on down the track. So look, as you can see here, price for a number of months now has just been tightening, and even 4 weeks ago I did this video, a bit of a walkthrough about some of the concepts and ideas on how to play the move, but people really asked for some specifics about setting up the actual trades on how I would do them. So I think now's the perfect time. We can see here a month ago we thought things were getting tight and it has continued to just tighten up. So I'm going to walk you through some options, futures, some of the volatility products and tokens that you have at your disposal. So to start off with, I just want to show you a volatility index, and I should probably let you know that this is going to build on some other knowledge. So if you haven't watched just the basic tutorial on FTX on how to set your orders and the different order types, I'll link that video down below. And I've also done a video on the basics of the options and the prediction markets. I touched on the MOVE product there as well. So if you don't know anything, probably best to go back and rewatch those before we dive into this video. Now, BitMEX themselves have a volatility index, and this is a number, one of a number that can show us visually the volatility decreasing. So if we type in BVOL, which is not to be confused with one of the tokens that we're going to have a look at with the same name in just a second. If we type in BVOL here, we can see a 30-day rolling measure annualized of Bitcoin volatility. So what this is saying is, if we sample the last 30 days, how volatile would Bitcoin be, or has it been if we expanded that out over a year? And so when this number gets down to 20, which you can just sort of see behind me there, it's been up as high as 170. That tells you that Bitcoin would be moving 170% or as low as 20% over an entire year if it stayed as, well, I guess, less volatile as it has over the past 30 days. So that's the way to think about that number. Now, I might just bring up the Bitcoin price just for you guys to have a look. Let's compare it there. And what you can see is when Bitcoin got up to 10,400, then we have this big crash, and that's when the 30-day annualized volatility, it climbs. So it's saying that if price action stayed this volatile as it has over this past 30 days, then the volatility index is up around 170. So we'd expect Bitcoin to move 170%. So hopefully that's a bit of an introduction to the idea of Bitcoin volatility indexes, because we're now actually going to trade those specific products and tokens as well. So let's head over back to FTX and let's just start off with the futures markets. So when people click on Bitcoin here, a number of options come up, and this can be really overwhelming as a beginner because they've got some different tokens that you can trade. They've got the spot market where you can just buy Bitcoin with US dollars or Tether. And then they've got the MOVE contracts, which we're going to talk about, some shorter dated MOVE contracts here, and the futures. So the Bitcoin perpetual is the current contract where everyone can trade and use leverage, and they're betting on the price. But then we've got some futures. So this is September 25th and December 25th. And what you'll find is the price is trading slightly differently. And this is what's known as backwardation or contango. And you don't really have to understand what that means, other than different markets can have a sort of upwards slope or downwards trajectory into the future. So we might be thinking that there's going to be more natural gas used in winter, so the price is likely to go up, or there's going to be a big shock in the oil market, so we might think that price is going to go up or down in future. So that's how the futures price can be different to the current price. Now, in some markets, it might be exactly the same. But what we can see here, the blue line is the current Bitcoin price on FTX that everyone's trading. 9,100, give or take, and the futures market is around 9,200. So what people are saying is they think the market is going to be roughly a bit higher out till September. Now, if we click on the December contract, that should be higher again, and it's around 9,300, bit more. So people are just saying that, yeah, we think Bitcoin is likely to go up a bit. Now, that's not necessarily guessing the exact price. It's just telling you the slope, and we can build all other products, trading and pricing off this as well as we go. So that is another option for you if you're a very beginner. If you think that Bitcoin is going to be much higher than that in the future, well, you could just buy that contract out for September or December, and it avoids the fees, the perpetual contract where you've got these daily fees. Now, if you think Bitcoin's going to go down in future, you could short this. Now, obviously, that's a very dangerous thing to do if you're a beginner, but if someone's willing to let you take that trade and you think price is going to go down, then why wouldn't you want to sell it at the higher price out in the future? So these are, I guess, the first basic things that you can do. But the markets that I think are the most valuable to trade when we want to take advantage of an expansion in volatility are the options market. So let's, if you click on options, it's going to bring up this screen. That's just the price there. This is a visual representation once you do have a position on. So last night I was preparing this tutorial and I bought a 10,000 Bitcoin call. Now, if you don't understand what that means, go back and rewatch those videos. If you're in our group, go to the learning units, and I've done some detailed tutorials on crypto options and Bitcoin options as well. So what we can see here is it shows us where we're going to be in profit in the green and how much versus where we would lose money in the red, and the price is down the bottom here. So buying a 10,000 call, that cost around $1,000. So our break-even price goes up to $11,000. Once price gets above there, well, we've paid for the price of the option that we bought as well as the trade being in profit. And if Bitcoin is $20,000 in the future, well, that's fantastic. We've got the option to buy it for $10,000 because we bought that call. So how do we buy options? Well, this is a little bit different to some other interfaces that have got the whole screen full of all those numbers and options chain you might be familiar with. But with FTX at the moment, it is a request quote form. So you just type in what you want. So the trade we're going to put on today is what we call a straddle. So we're going to buy a put and a call, which basically means we're going to bet that price is going to go up and down at the same time, and we're going to buy them right near the current price, which is what we call at the money. So you might have heard these terms, out of the money or at the money, and all that means is if you're buying options that are far away from the current price, you're betting that Bitcoin's going to go to $100,000 by the end of next year. Well, that's out of the money. It's a long way away. At the money means we're playing right where the current price action is. So I might just head over to the chart in a second, and I'll do these as a visual representation again so you can see how this works and how you can profit. Because when people hear that you're buying a put and a call, effectively betting that price is going to go up and down, they think, well, how can you possibly win with that trade? So price is currently around 9,100. Let's just call it 9,000. And with these options, I always try to use round numbers. Just for the ease of it, for the system, I'm sure it's all algorithmic and it wouldn't really matter. But when you do big over-the-counter trades, for instance, if you're trying to find a buyer, you don't want to pick some really obscure number. A large buyer for a big trade block is going to want to bet on 10,000 or 15,000. They're going to want to bet on round numbers when you're doing big options trades. So let's click on call option. The date that we want to pick, you want to go at least a few months out when you're buying options. If you buy them, only a week or a month away, they suffer from what we call price decay, where every day you're wrong, it's going down in price, and the chances or the time you have to be right is a lot smaller, and that option can expire. You don't need to understand that too much. Again, I explain that a little bit more in those introduction videos, but for today, we're going to do a September and a December play, just like we saw with those futures markets. So 30th of September, we're just going to buy one 9,000 strike price, and the strike price just means the price that you're betting on. So we're betting that it's going to go up above 9,000. Let's click on request quote. And if you click it really quickly again, it's going to keep that whole form typed in rather than doing the dates again. And we're going to just do the same for our put option. So what we can see here is it's generated a quote. So let's call it around $1,400 for the call and around $1,200 for the put. So let's head back over to our chart. Let's bring up the Bitcoin price. Let's get rid of that other overlay I had. And let's actually use the lines I've already got on the chart. And what we're going to do here is show you visually the area that we need price to go out of for this to be a winning trade. So if we say price is currently at around 9,100, the call that we bought was $1,400 for each one Bitcoin. So we add that on to the price because that's our, I guess, total cost, and we want to make more money than our total cost for this to be a profitable trade. So adding that together, we get 10,500 for the call, and we want to drag that out to September 30. I'm looking at down the bottom here behind me. Okie dokie, that's all fantastic there, and I'll let that go. So we'll do the same with our put. That was $1,200 from the current price, gives us 7,900. And what you can see here is individually, if you bought these positions, this is where you would need price to go below if you were betting it was just going to go down, or above if you were betting it was just going to go up, because we need to take into account the price of the option as well. But when we buy both, we need to add those together because that is our total cost for putting on a straddle rather than just one option or one bet. So we add those two together, 1,400 and 1,200, that's 2,600. Let's add that to the current price. That's going to give us 11,700. So we'll drag that up a little bit. Let's add on another 1,400, or subtract off, I should say. That's going to take us down to around 6,500. So what you can see here is the price that we need to this to turn out to be a profitable trade. So we can see that along this line, again, what that represents is just roughly how much the price of that option would decay over time. So it's not a perfectly straight line. As I spoke about before, they tend to lose more value the closer you get to the date, whereas at the beginning when you make the bet, that the price, the decay of the option happens more slowly. Again, that's not too important to understand. But what this shows you is that if price has a big move next week, you can sell this option back and it's still going to be worth quite a bit of money. Whereas if you're taking this trade off, that option, no one's going to pay $1,000 or $1,400 for that option like you did way back here, because there's no time left for them to be right, if that makes sense. So if we're expecting this big move, we've seen huge moves in the past on Bitcoin. Let's say that price jumps way up here to $12,000 next week. Well, that is going to be a very profitable trade for us, even though that we bet the price is going to go up and down. The same if we fall off a cliff and go down to 6,000. I think that is less likely, and that's probably what we were seeing reflected in the futures prices before. So let's just maybe make this green. What the futures price was showing us before is that there's a slight upwards trend. So all the way out to December, to the end of the year, traders are thinking that price is going to have a bit of an upwards drift. It's more likely to go up than down. And that also represents the fact that you can only go to zero, whereas Bitcoin can go hopefully 100,000 or more. So that skew between potential upside and potential downside, that's why you often see things drifting high in terms of their price. Now, when Bitcoin's at 20,000 at the top of a bubble, maybe a lot of traders are thinking it is going to go down, and that's when the futures might have a downward slope to them. So I know these are really advanced concepts, but hopefully that's helped you understand what's going on here. We're just going to go back and do this one more time. I'm going to timestamp this video as well, guys, if you're not interested in this and want to go to certain sections or rewatch it all later. So let's bring up again, let's bet $9,000. This time we're going to go out to the end of the year and we're going to make a bet on what the price is going to be before the end of the year. Let's just do that with one call, request a quote, and do the same again for one put. So we're betting that price is going to go up and down before the end of the year. So let's call that 2,400 and 2,000, just to use some round numbers. So heading back to the charts, 2,400 and 2,000. Let's make these a different color for the end of the year. So adding that on, let's add them together straight away. So we've got 4,400 is the total cost to put on this trade. And that is going to take us up to around 1,350. That sounds about right at the end of the year. Same again. So we're going to deduct 4,400, the cost of the trade, from the current price. It's going to take us down to around 5.7 off the top of my head. Is that right? 4.7. Yes. Quick maths here, guys. Okay, cool. That looks about right. So as you can see, there's a bit of a gap here. Again, in reality, like I said, those curves are not straight lines, so that would probably be a lot tighter. There's not as much of a spread there. If you want to go into super advanced concepts, this is where you can maybe arbitrage these sort of differences between products or between different platforms that do options and move products as well, which is the next thing we're going to talk about. So they're the two profitability, I guess, zones on these two different trades, depending on how you want to play it, if you want to buy those two options. Let's go back though and have a look at the next thing we want to trade, which is the actual move contract itself. So we'll take off the BVOL tokens. This is where people get really confused. So there's a range of these move contracts where you can bet on how much the price is going to move for a given day or week or even quarter. Now, where people get tripped up is the fact that they have more than 1 day and 1 week and 1 quarter that you can actually trade. They're all live. But there's no point betting on what is going to happen tomorrow, how much the price is going to move, if we don't know where price is going to start the day tomorrow, if that makes sense. So people might say, oh, this is where the beginners get caught up. They think there's going to be a big move today or tomorrow. I'm just going to buy the tomorrow, the move contract for the next day. And if there's a huge move today, they think, that's great. But it doesn't matter what happens today because you're betting on what the change is from when tomorrow starts until tomorrow ends. So that's really important. And I think a lot of people, they buy these contracts for, Q1 2021, but there's no point betting on what's going to happen in that quarter or Q4 this year, how big the magnitude of the move is going to be in that quarter, if you don't even know whether the quarter is going to start yet. Okay, so if we have a huge move this quarter, that's going to change what you think is going to happen the following quarter. So short term, people at the moment are betting that price is going to move around $133 before the daily candle closes, and these do move on the daily candle. So in Australia, that's around 10 a.m. each day at the moment. It's different wherever you are in the world, but you can always head over to your TradingView chart. On the daily candle, it's got the countdown. So there's about 21 hours left in that daily candle to form. And what you can see is recently, these candles have only had $100 or so of a range, and that's what people are pricing in at the moment with these move contracts. So that would be one way to play it. If I think there's going to be a big move in the next 21 hours, and often we do have big moves on a Friday night, depending when you're watching this, or Saturday morning in Australia before 10 a.m. when the candle closes, you could buy this contract. If you think price is going to finish right where the candle opened, you could short this contract and bet the price is going to go down. Another way to play it is the weekly contract, but that actually also ends on the 17th. So that's a less favorable trade, I would say. One that I am starting to like is this quarterly contract. I'll bring that up the top so you can see it. So July, we've just started this quarter. This trades all the way through to the end of Q3, so out to the end of September. And this is currently trading for around $2,000. And this doesn't matter if Bitcoin goes up or down. We're just betting on how much it's going to move this quarter. And what you'll see when you head over and click on these products is the strike price. And the strike price is the price where this quarter starts. Sorry about that. It's jumping all over the place. 9,230. So that is where the price opened this quarter in July. And wherever we finish on September 30th, that is going to be how big that move contract was. So let's head back over to our charts, and again, let's grab a different color. Let's make that pink. Current price out to September 30th, and we're adding on 2,000, which is the cost of this current move contract. And what we find is that that is a lot closer to the further dated trade that we're putting on before, rather than the same time period putting that on as an options trade as a straddle. So, just going here off, just blindly setting this trade up, I would say that the better way to play this, when we look at it visually, we've got more room to be right and make more money using the move contract than playing this with the options trade, because you can see how this is more narrow. So the way to understand this is if price goes to 11,500 on this day, well, that would only just be a break even if we used the options, if we bought the straddle like we had before. Whereas if we have the move contract, if that's the way we play it, buying the quarterly move contract, if the price was in the same area, we'd already be $600 in profit. So does that make sense, that difference there? And again, for a super advanced traders, this can be an arbitrage where you might buy this and short this, and price is going to settle at wherever it ends, and you're going to make up the difference as they meet at the actual price when that trade settles. So look, I know that's some pretty advanced stuff. The last thing I just want to mention quickly is their BVOL tokens. So these are a far more advanced instrument because they're made up of so many different contracts, and they're actually trying to mirror what we looked at before. So let's actually just bring that up. The BitMEX BVOL index. And what you'll see is if we compare it to the actual BVOL tokens that FTX have created, it's going to mirror that really, really closely. And what it's attempting to do is reflect the volatility of Bitcoin. Now, these contracts and indexes that have got lots of moving parts, I tend to avoid them. A little bit like a leveraged ETF or complex ETFs, they can have a bit of a drag and decay. I'm just more familiar with the other products. But what you can see here is that as volatility has gone down, this has been a really profitable trade. So this token on BitMEX, on FTX has gone from 9,600 down to 3,000. As volatility has been compressed 66%. So if you shorted that token, or you can actually buy the inverse BVOL token, and that'll do the opposite. So if you a few months ago thought that volatility is going to compress, then the price of this token is going to go up. So it does the inverse. So I hope that's a good introduction and explanation of all the different products and how to trade them. How to think about it visually. I really like, and this is something that I'd love to build in future. Maybe a bit of a hint on another project that I might be working on. But I just think the way that all the products that we have now in the space on exchanges like FTX and derivatives, options, the way we can construct trades, hedge our portfolio to protect from the downside. We can now play volatility. It's really great to see so many of those types of things, the tools coming to the space. So guys, don't forget that link in the description does get you a double discount on fees. If you're a beginner, practice, don't dive in. You should never short options or short contracts if you're a beginner and you don't understand how these things work. So look, keep learning. I'll continue to do my daily updates in the group on price action and these sort of ideas, but I really hope you have found that helpful. Leave the comments down below, any other questions you've got, and smash that like button, subscribe if you haven't already, share this video around, and I'll talk to you again soon. Cheers.